you'll have to work a bit harder to prove your creditworthiness. You might need to provide more documentation when applying for loans or credit cards. And you could miss out on some of the conveniences that come with AI scoring, like real-time updates to your credit profile. It's also worth considering that while you might be able to avoid sharing your social media data or online shopping habits, some level of digital footprint is probably unavoidable in 2025. Even traditional credit scoring methods will likely incorporate more digital elements than they do today. The key is to understand the trade-offs. By opting out of AI scoring, you're prioritizing privacy and control over your data. But you might be sacrificing some convenience and potentially limiting your options. It's all about figuring out what matters most to you. If you do decide to go the traditional route, there are ways to minimize your digital exposure while still maintaining good credit. You might choose to use cash or prepaid cards for most of your daily spending, reserving credit cards for specific credit-building purposes. You could also be selective about which online services you use, opting for privacy-focused alternatives when possible. Remember, though, that even if you're not sharing your entire digital life, consistency is still key. Regular, on-time payments and responsible credit use will continue to be the foundation of a good credit score, regardless of how it's calculated. Financial Literacy 2.0, understanding your AI credit score. Imagine a world where your credit score changes in real time, based on factors you might not even be aware of. Sounds like science fiction, right? Well, welcome to the reality of AI-driven credit scoring in 2025. It's a whole new ballgame, and we're about to learn the rules. Let's talk about Financial Literacy 2.0. It's not just about knowing how to balance a checkbook anymore. In this new world, understanding your AI credit score is like having a superpower. It's the key to unlocking financial opportunities you never knew existed. Think about it. Traditional credit scores were pretty straightforward. Pay your bills on time, don't max out your credit cards, and you're golden. But AI credit scoring? It's like trying to solve a puzzle where the pieces keep changing shape. The algorithm is constantly learning and adapting, considering factors that might surprise you. So, how do we crack this code? First, we need to understand that AI doesn't just look at your payment history. It's analyzing your entire financial behavior. That morning coffee you buy every day. The algorithm might see that as a sign of consistent spending habits. The way you manage your streaming subscriptions? That could show how well you budget. For recurring expenses. Here's the thing, you don't need to be a tech genius to understand AI credit scoring, but you do need to stay informed. Financial education is more important than ever. Look for resources that explain AI in simple terms. Many banks and credit unions are offering workshops on this topic. Online courses and podcasts can be great tools too. The key is to find information that's clear, up-to-date, and relevant to your situation. Let me give you an example of how this knowledge can make a difference. Sarah, a freelance graphic designer, learned about AI credit scoring and realized her irregular income might be seen as a risk. So, she started using a budgeting app to track her expenses and set aside money for taxes. She also made sure to pay her rent and utilities on time, even during slow months. When she applied for a car loan, the AI system recognized her responsible financial behavior, despite her fluctuating income. She got approved for a better rate than she expected. Now, I know what you're thinking. How can we keep up with all these changes? It feels like financial technology is moving at warp speed. But here's the good news. You don't have to know everything. Focus on the basics. Understanding your spending patterns, managing your debts, and saving for the future. These fundamentals will always be important, no matter how advanced the AI becomes. Let's talk about why this matters beyond just getting good loan terms. Financial literacy in the AI age is about empowerment. When you understand how these systems work, you can advocate for yourself. You can question decisions that don't seem fair. You can make sure your financial story is being told accurately. Think about it this way. AI credit scoring has the potential to open doors for people who were left out of the traditional system. But that only works if the AI is fair and ethical. And guess what? Your financial literacy plays a role in that. The more informed consumers are, the more pressure there is on companies to create transparent, unbiased systems. So, what can you do to boost your Financial Literacy 2.0? Start by taking a close look at your digital footprint. How do you manage your online accounts? Are you consistent with your payments across different platforms? These are the kinds of things AI might be looking at. Next, get comfortable with data. Learn how to read your own financial reports. Understand what information is being collected about you and how it might be used. This knowledge is power in the AI age. Finally, don't be afraid to ask questions. If you're applying for a loan and the decision is based on AI scoring, ask for an explanation. Many companies are working on making their AI systems more transparent. Take advantage of that. The future of credit, beyond 2025. While we've explored the exciting changes coming to credit scoring in 2025, let's take a moment to look even further into the future. What if your credit score could do more than just approve loans? What if it could predict your financial future? As we move beyond 2025, the world of credit scoring is set to undergo even more dramatic transformations. Imagine a system that doesn't just look at your past financial behavior, but uses advanced AI to forecast your future financial health. This isn't science fiction. It's a very real possibility that's already in development. One of the most intriguing concepts on the horizon is the idea of predictive credit scoring. Instead of just telling lenders whether you're likely to repay a loan, these advanced systems could provide insights into your long-term financial trajectory. They might analyze factors like your career path, education, and even your social connections to estimate your future earning potential and financial stability. Think about how this could change the game. A recent graduate with a modest income but a degree in a high-growth field might receive a more favorable credit assessment based on their projected career trajectory. Or a small business owner showing strong growth potential could access better financing options, even if their current revenue is still modest. But it's not just about lending decisions. As credit scoring systems become more sophisticated, they could be used in all sorts of ways we haven't even thought of yet. For example, what if your credit score could help you find the perfect job? Employers might use these advanced assessments to identify candidates who are not just qualified, but also financially responsible and stable. Or consider how this could impact healthcare. Advanced credit scoring systems might be able to predict your likelihood of developing certain health conditions based on your financial behavior. This could lead to personalized health insurance plans or early interventions to prevent costly medical issues down the line. Of course, with great power comes great responsibility. As credit scoring systems become more predictive and all-encompassing, we'll need to have serious conversations about privacy, data security, and fairness. How much of our personal information are we willing to share in exchange for better financial opportunities? And how can we ensure that these systems don't perpetuate or exacerbate existing inequalities? Another exciting possibility is the development of global, standardized credit systems. As our world becomes increasingly interconnected, there's a growing need for credit scores that can travel with you across borders. Imagine being able to move to a new country and immediately access financial services based on your existing credit history. This could be a game changer for international students, expats, and global businesses. But creating such a system would be no small feat. It would require unprecedented cooperation between governments, financial institutions, and tech companies. And it would need to navigate a complex web of different legal systems, cultural norms, and economic conditions. As we look to the future, it's clear that the relationship between consumers and their credit scores is going to become much more dynamic and interactive. You might receive real-time updates and personalized advice on how to improve your financial health. Imagine an AI assistant that could warn you when you're about to make a purchase that could negatively impact your credit score, or suggest smart money moves based on your unique financial situation. This level of engagement could transform how we think about financial education. Instead of learning about credit in abstract terms, you'd be getting constant, practical feedback on your financial decisions. This could lead to a more financially savvy population, better equipped to navigate the complexities of the modern economy. But let's not get ahead of ourselves. While these future possibilities are exciting, they also come with risks and challenges. As credit scoring systems become more complex and influential, there's a danger of creating a black box that's difficult for consumers to understand or challenge. We'll need to strike a careful balance between innovation and transparency. There's also the question of how these advanced systems might impact financial inequality. On one hand, they could provide opportunities to people who are currently excluded from the traditional financial system. On the other hand, if not properly designed and regulated, they could exacerbate existing disparities or create new forms of discrimination. That's why it's crucial that we maintain an ongoing dialogue between consumers, lenders, regulators, and technology developers. We need to ensure that as credit scoring evolves, it does so in a way that's fair, transparent, and beneficial to society as a whole. Let's talk about the future of credit scoring. In 2025, your digital footprint is becoming your financial fingerprint. Every online purchase, social media post, and digital interaction could shape your creditworthiness. But here's the thing, this isn't something to fear. It's an opportunity to take control of your financial story. Think about it. These new credit scoring methods are opening doors that were once closed. They're looking beyond just your bank balance, considering your whole financial picture. This means freelancers, gig workers, and young adults have a better shot at loans and financial products that fit their unique situations. So, what's the smart money move here? Stay informed about how AI is changing credit scoring. Manage your digital presence wisely. It's not just about privacy, it's about showcasing your financial responsibility. And remember, you're in charge of your financial future. By understanding and embracing these changes, you're setting yourself up for better opportunities and a stronger financial